Okay, we're back. Welcome. We've got some special guests today from Cruize FInance. Good evening, good afternoon, good local time, gentlemen. Samarth and Prithvi, welcome. It's good to have you guys. How are you
Really
doing?
nice to be here. I'm sure it's afternoon for you, so good afternoon, Jedi. Thanks for having us.
Yep.
It's a pleasure. I wanted to just first of all welcome you guys. It's good to have you here. We were obviously quite intrigued with your project, but we'll get into that later. I'd like to just kick off today's show with just a brief introduction in terms of Samarth, you can go first from my left
Awesome.
to right. Yeah, in terms of your background and what brings you to Cruize FInance.
Sure. So essentially, I have an engineering background. Actually, did my college here in Pune. That's where I'm based. And by the way, Prithvi was also in the same college as me. So I've been in the industry since 2019. Been hacking around a lot of ideas, been contributing to a lot of open source, and really excited to be working on Cruize Finance. And yeah, also happy to dive deep on the idea. But I guess we can have Prithvi give a brief introduction about him as well.
Yep. So yeah, as Samarth said, we went to the same college. Graduated in 2021. Graduated with a CS background, and we worked on multiple projects even during college. That's how we sort of gelled up. And a year after we graduated, we had different jobs. Then that's when we started Cruize Finance. But at the core or at the base level, yeah, we've always been into tech since I think early 2017, like Web 2, and then jumped into Web 3 in 2019. Yeah, like acquiring new technologies every day. Yep.
So in terms of kind of like a background and coming
Yeah.
into the space almost like relatively late, how do you relate to kind of like project founders that, like, a lot of project founders kind of like found their feet sort of between
Yeah.
2014 and 2017,
Yeah.
kind of
Yeah.
like getting nuked over that 2017 parabolic state. I mean, how do you
Exactly.
relate to kind of like what happened back then to, obviously, we've just been through this bear at the moment. You see, I said we've just been through, maybe we are in a bull,
Yeah. Yeah.
but it's like, how do you guys kind of like relate to that shift from kind of like the more OGs kind of to you
Yeah.
guys being more new into the space?
Yeah, we actually get a lot of wisdom from the people who've been in the space for a lot of years, and I'm sure back in the day was mostly the hype around Bitcoin, and Ethereum was fairly new back in the day. So the DeFi hype actually just started in 2017 with the explosion of Uniswap, and then that was followed by all the crazy ICO mania. So we have been through at least one uh, whole hype cycle ourselves. So we do have that much experience. But yeah, it's always great learning from the OGs. Like how the era has changed over the years, and how the technology itself is catching up to rapid improvements and like major innovations in the space. Really exciting to hear about it every time I meet,
Also we were
especially the
like
OGs in the space.
14 years old. Also, we were like 14 years old back then.
Yeah.
So, if you think about it, you need money to come into crypto. We didn't have any. I mean, couple of 14-year-old kids. Just too difficult.
Yeah, I mean, we try our hand at mining,
A
like
lot of
very
stuff.
basic setups
Yeah,
back then.
yeah, yeah.
So I mean obviously from the experience that's come before, I mean, this is the beautiful thing with any kind of innovation, is that you obviously
Yeah.
use the tech from before and you use it to your advantage so that you can innovate further. Um, which is the natural question to follow, is like, so where's the origin story? What is the origin story around Cruize, and what inspired you guys to actually do Cruize Finance? I mean, I know I haven't asked the question what Cruize Finance is. That's the one
Yeah,
afterwards, but I'm just curious as to,
yeah,
in light of the past and kind of like pre 2017 to where we are now, where's the inspiration coming from? What is the underlying principle behind it?
Yeah, so like the genesis of Cruize was, unlike a lot of the good ideas, because most of the good ideas are born from the, like the problem that some founder faces. With Cruize, like our very initial intuition was, we just wanted to jump on the blockchain train, just build something, get something out the window. So we actually started experimenting with some NFT based ideas. That was the, craze back then. I remember it was, I think it was a concept called NBA Top Shots, something
Yeah,
that was really blowing up. Yeah,
yeah.
so that's what really inspired us to start building at least something. So we had even started working on a great on a blockchain based game, but that we just decided we could probably build something a lot better in DeFi. So like we also have been trading some doing some trading since college. So we thought it would be much better if we could use that experience in DeFi. So initially, the genesis of the idea for Cruize was basically, we wanted to solve for, like the volatility of the, digital currencies, which basically poses as a barrier to entry for a lot of folks. Like that volatility is basically like a roller coaster ride. So we thought, how can we make that experience better for these, like not so experienced folks? So initially, we basically wanted to build like an asset management kind of protocol, which basically provides you protection against downside volatility. So that was the idea we took, and we have actually entered the Chainlink, fall hackathon in 2021, I believe it was. Yeah, and yeah, that's where we also met like our first team, and that's where things started taking off for us, and we actually got picked up by this incubator called Gravity X Capital. So they provided us with a lot of like they helped us bridge the gap between our experience in the blockchain space, and so that also helped us get our first seed investors. So we were able to close our seed round in April 21, and since
22,
then, yeah,
April
April
20.
22. Yep. And so since then, we've basically been doing a lot of market research, listening to a lot of feedback, and we, like we have seen the idea go from basically just a simple idea to currently what it is, and we've made a lot of significant improvements. And yeah, happy to talk about the core idea behind Cruize.
Yeah. Jedi, I think you're on mute. Yeah.
Is there anything that Prithvi, would you like to add anything to kind of like the historical context of what inspired you guys to do what it is that you've done?
Yeah, I think one part that made us go a bit crazy was how many people are like forking projects on a weekend. I mean, I think Uniswap created so many folks, Sushi, Pancake, and the other swaps. It just became a comedy ride. So I mean, at that time, it just felt a bit foolish to build something that's already done, even if it
Yeah.
might bring some money in. That was something crazy. I mean, if you look at derivatives trading or dexes, there's one opening every single month. I mean, with the new chain, there's just one opening up every month. So yeah, I mean, that's why we actually did think of, okay, let's pick something that's actually not never done before, or either it's too difficult, or let's actually solve a problem rather than just coming up with a fancy new name and a UI and
Yeah.
building something that's already done. Yeah.
Okay, so Prithvi, you get the chance to tell me what is Cruize? What are you guys actually doing, and what is it that you guys are solving?
Sure. So at the core of what we're trying to solve is uh, provide capital protection to users who hold the basic cryptocurrencies like Ethereum and Bitcoin, while providing them with realistic yield. So, I mean, if you hold Ethereum and Bitcoin right now, and if you don't do a lot of yield farming or anything, then it's only for one reason. You're hoping to get a 3x, 4x, 5x return if the token appreciates in value over the next few years, right? So I think what we built Cruize so far is sort of like an entry point or a one-stop solution for people who just simply hold these cryptocurrencies, or they do trade across DeFi and want to actually get some realistic yield on their assets without putting them at crazy risks. Like some of the protocols that have or are trying to do this, they go by some of the means that are much more riskier. selling options and yield farming that cause liquidation issues. So we researched a lot over the past few months and figured out there are ways in the traditional finance that can be brought on chain onto DeFi, which can offer real yield for Ethereum, Bitcoin, and some of the few other blue chip assets. So yeah, this is what Cruize is. We provide capital protection and offer real yield on the blue chip tokens.
Samarth, how are you guys actually producing the real yield in its current form? Because you've obviously got, there's vaults, right? So you got vaults, you've got single, and you've got pairs. Where is the real yield deriving from?
Yep. So like we already had some experience in derivatives. We had done some research, and then we actually came up with a new version, which is the current form of it. And the way we produce this yield is using a strategy called structured products. This is a concept from traditional finance. It's like it's traded mostly by like sophisticated traders, and it's mostly done over the counter. So the way they work is, like they basically combine several different financial instruments like, derivatives, bonds, and the way so basically they also have like several categories. The one that we are especially focused on are the principal protected variants, because they provide a guarantee that your capital will remain safe. And the way they work is, like you basically provide some base interest on your assets. In our case, the current version has the base interest coming from the market maker. So we are actually lending the capital to them. So there is that component of credit risk at the moment, but we are actually working on doing with it in the next version. But yeah, so that base yield is basically used, like a portion of it is used to buy exotic derivatives, like exotic options. More specifically, like the one that we trade with are called barrier options. And so since we are only using like a portion of the yield to buy these options, like we don't capital at any risk. And since we have the long position in these options, there's like that potential of upside. And because they're like the barrier variants of the options, they're a lot cheaper than the vanilla ones, like vanilla call or put. So actually, like we are able to, pre-package these different strategies like lending and option trading into a single product. That's where the real yield comes from. It's basically just the return that you get on your, long option position.
Okay, Prithvi, just from an impermanent loss perspective, I mean, is that something that you guys have managed to solve from a problem side of things, or is that still something that's persistent?
It's still going on, yeah. So we are working on building these vaults where existing users of these liquidity pools on take Ramses exchange, for example. These liquidity pools have impermanent losses happening. So we are building these vaults where users can deposit their LP tokens or provide liquidity via the Cruize Vaults, which can offer a pretty higher yield. That could make up for some of their impermanent loss. So what we're sort of like focusing into giving them an impermanent gain to solve for their impermanent loss. So we are working with a couple of more protocols as well to achieve that. Yeah.
So I mean, in terms of kind of like building like these different, I mean, essentially you're employing a strategy within these vaults. It's a strategy that you guys have developed. So I am correct in assuming that. Okay, so that is correct. Absolutely. So you've conducted or you've employed a particular strategy that allows for whatever it is that you guys are doing from an options perspective, from a yield bearing perspective, whether it's a single token or whether it's a paired token. That's kind of like built into the mechanic of it. In terms of the potential for you to increase the vaults and still maintain the integrity of what it is that you're doing from a liquidity perspective, from essentially the balance of the system that you've created, is there scalability in mind here? Is it something that you guys could quite easily have, provided the collateral is sound and it's a great token and it's got the liquidity? Could you guys grow this thing into infinity potentially, or is it just something that you are quite set at?
Good question.
So in terms of scalability, the major challenge is you're supporting the smaller altcoins, especially the newer coins. That is a bit of a hassle because like we don't have any liquid markets for those, not even in spot, let alone for derivatives and options. So that's the major challenge. So essentially, most of the current vault implementations only support like the blue chips like BTC and ETH. In terms of scaling those blue chip offerings, like it all depends on the liquidity that the market makers are able to provide. Like fortunately, the space has matured enough for there to be like several competing market makers who offer like competitive prices to the exotic derivatives. So exotic derivatives is still like a smaller market than like the vanilla variants, but we'll have like a couple market makers in our network that are able to provide like competitive returns. And so we are able to scale this up to like tens of millions at the moment to potentially hundreds of millions as well. So like one example is Ribbon Finance, which also deals with options. Like they also had like pretty good TVL during the bull market. And so since it's based completely on options liquidity, we are also able to get the same level of liquidity, like also provide competitive returns through the network of market makers.
Prithvi, do you want to add to that?
Yeah, I mean, I think like Ribbon was also one of
Yes.
the motivation.
I was thinking about that as well. When I was kind of like articulating the question, I was thinking about them as well.
Yeah, they were actually one of our. They actually ended up being a motivation for us to actually
Yes.
bring structured products on chain, because what they do is they directly sell options and your capital goes down.
Yes.
If the price of your assets go up, you have the potential of losing all of your capital within a week. So I mean, we couldn't believe how or why people are depositing in these vaults. It was just crazy. So yeah, that's why we went on with building something that's more robust, scalable, uh, while protecting your assets no matter what. I mean, at the end of the day, if the yield isn't as much as you expected, you should at least get back your capital, right? So
Yes, absolutely. Yeah. I mean, obviously, like I think the collateral basis is obviously always going to be the challenge. I mean, it's like, you guys are deployed on Arbitrum, for argument's sake. It's like the easy question to ask is, so why am I not seeing Arbitrum here? And it's like, there's a lot of good answers to that question, but at the same time, it would be really cool to be in a position where, you could use a native token and the underlying value that is attributed to it. Obviously, volatility is a factor. How do you manage that? But that's up to you, big brains, to figure out. And I think that's where the challenge lies in creating these vaults, in terms of how do you contain the volatility, if it is at all possible. I'm really interested. I'm looking at Cruize FInance. Obviously looking at the vaults, and we've obviously rationalized, the principal protection and the yield booster itself. I'll come back to that, but I wanted to just chat about your structured products. I know that it's something that you guys are working on at the moment. Is there perhaps a little bit of kind of like a sneak peek around the alpha in that? What are you guys looking at? Is there like a high level kind of like perspective around what it is that you guys have got planned for that?
Yeah, sure. Yeah, we can like essentially what we're planning for the long term is like build a full suite of all weather investment strategies for investors. So right now the current vault is like a simple, I would say simple, because we are working on a lot more advanced strategies. So it's basically like a simple vault which generates yield on a weekly basis, and it's very market neutral. So in fact, it generates the best yield when the market is within a range. So in the future, what we're going to do, like make it so that any kind of investor can find strategies that suit to their like unique risk profile. And so we'll also have some vaults with like selective level of risk, and based on that, obviously the returns will be higher. But the principal protected versions will also have several different variants. Like, for example, if you have a bullish view on the market, we have a vault specifically for that. So it generates the highest return when the market is bullish, while at the same time being capital protected. And so we have one vault specifically for bearish market, and then some risk on vaults that also have longer term structures but much better returns. So essentially, that's what we're trying to create, like a full suite of investment products for investors, catering to their unique risk return profiles.
Okay. Interesting. I think that's going to be. I think So what we've been seeing quite a lot of is kind of like, kind of like middleware products which facilitate all forms of investment potentially. Around vaults, around protecting those vaults. There's different strategies around how those vaults work. But what you guys are essentially doing is that you're bringing it all together. It's kind of like, I mean, it seems like, are you operating those vaults as separate entities and then bringing them together in terms of the fees that are being earned? Are there fees being earned in that process? How does the whole revenue side of things work? Just expanding early on around the real yield aspect of it.
Yeah, so the revenue structure is pretty simple. Like whatever yield we are able to generate on your principal, we just take a cut of it. The exact number is around 15%. And
Okay.
like this only happens on the yield we're able to generate. And additionally, there's also like a management fee which is charged on a yearly basis, so that's around 2%. And in terms of like aggregating these vaults, it basically depends really on the underlying structure. Like, for example, the single-sided staking vaults like ETH and BTC, those are based mostly on generating the base yield through market makers. So they have like a different interface for generating the base yield. And if you talk about the double-sided vaults, that is something that we are working in partnership with Ramses. So that is integrated with Ramses exchange itself. And so it generates yield from the fees generated on Ramses. And we are also working with the Ennead team, which is basically like another protocol which is boosting yield for Ramses liquidity providers, for example. And then we also have more vaults, attuned for like more decentralized partners. So, for example, we already had a conversation with the Gains team, and now we're also with the Vala Exchange team to build like custom vaults for their native tokens. Not exactly native tokens, but they're liquidity tokens. And the interesting feature about these is that these liquidity tokens, which basically work like very similar to GLP, is they generate yield in the form of actual, like blue chips like ETH and BTC, because that's what
USDC.
is traded on their because that's what is traded on their perpetual exchanges. And so we're able to like create a vault which can boost the revenue of these liquidity providers significantly, and that also without any capital risks. In fact, for these new vaults that we're thinking, we don't even have any credit risk because the base is actually coming from the exchange itself. So that's like an interesting development that we're working on. Happy to. But yeah,
Well,
you can actually.
it's always going to be the guys that are building the tools to allow for everyone to mine that are going to make the money. It's kind of like, that's the whole point of bear markets and building, and like find your place in the whole ecosystem, and then take a small percentage and facilitate the whole process. I mean, that's what you guys are doing here. It's just how intuitive and how innovative do you guys want to do this? I mean, that's essentially what this is all about. You've clearly found a niche in this whole kind of like mechanic of, how do we maximize the efficiency of how money moves through the system, or liquidity moves through the system. I mean, that's essentially what you guys are doing. I think one of the biggest issues that we're seeing, particularly like as a community of traders, because I think primarily, blockmates, we're hands-on traders and yield seekers, and getting our hands dirty in what people are building out there and trying to maximize what it is that you guys are doing, is that we're finding that liquidity is always going to be the biggest challenge, especially, after the last kind of like 8 months. You go into a DEX, it works really well, but there isn't the liquidity there. So I wanted to speak about a very important part of what it is that you guys are doing, in my opinion, and that is, the user experience in relation to, what is actually happening from the user's flow. Like, how does that flow look like? What are you guys trying to achieve with that?
Yeah, sure. Prithvi, you can take this one.
Yeah, sure. The user's flow is pretty simple. They choose any of the vaults they want to deposit into. So recently, we just had a bit of a UI modification where, rather than showing just one vault, we showed vaults for different assets. So that's currently live on our mainnet website. So yeah, users can just decide what asset they want to deposit, just hit the deposit button, and you're done. Based on our vault's epoch, which is at max just 1 week for every vault, it never goes beyond a week.
Yes.
Your assets, they start generating yield on the next epoch. So if you deposit on, say, Tuesday, which is today, your assets would just idly be available for you throughout the entire week. So you can just instantly withdraw if you want to change, if you had a change of mind. But post Monday of the upcoming week, the vault gets locked up, and the strategy basically begins on Monday, and it's enabled. It's on till the Monday of the following week. So if you feel like you want to withdraw your assets, you can just submit a withdrawal request in the middle of the week and come back to the protocol anytime in your entire lifetime and just withdraw it. Yeah, they'll be available for you, setting aside.
Yeah. Just to add, like, we realize this is a pretty complicated process, like locking and submitting a withdrawal request. So currently our research efforts are focused on removing any kind of capital lockup.
Yes,
So
that will be the way.
Yep. Yeah, so you'll probably see that in the upcoming version post our public sale. So there won't be any capital lockups, and also be doing away with any kind of credit risk. So that's an interesting development that we're working on.
Yeah, no credit risk and no lockups. So that's the version 2, which is going to be pretty good. Yeah.
Yeah. And what exactly is happening on the back end of it?
In the current
I have to ask the nerd questions. I mean, there's a whole lot of our followers, they love that kind of thing. So if I go blank in the face, then it's kind of like then you're on the right track.
Yeah, I can answer this.
Sure.
So when the users deposit their assets, they go into our contract. From there, it goes into a multi-sig contract. And then at the start of the epoch, they are straight sent over to our market makers, who provide us with a base APY, which then the portion of that is what we use to buy the exotic options. And the epoch begins. At the end of the week, when the options expire, the market makers send us the APY along with the original capital, and it just comes back into our multi-sig safe. And right after that, if there's no withdrawal, then we again begin the process. So it's the whole that's like how the funds flow in. But what happens inside of our contracts is every time the epoch is reset, as in every time the round increments by a number, we have to calculate the shares of the week. By shares, I mean how much APY a user is supposed to get based on the amount of liquidity they provided into our entire vault. So if we have 100 Ethereum, and if you provided 10 Ethereum, then based on that Ethereum and the APY that was generated on the 100 Ethereum, we compute your actual shares. And so every week the shares, they get computed, so that whenever you come back to the protocol to withdraw your assets, you get your assets back plus the APY that have been generated over the last several weeks. A good thing to point here is that your APY gets compounded every week. So technically, if you initially deposit, say, 10 Ethereum, and over the first week we generated, say, 1 Ethereum, so for the next week your capital is technically going to be 11 ETH, which is 10 plus 1, and so it just keeps adding up to your original capital. Jedi, I think you're on mute.
So I think that's brilliant. I mean, that's exactly what you want. I mean, I remember early days of, FT on Phantom and trying to auto compound on your own and on AVAX, where you withdrawing and then depositing so that you can get the maximum. I mean, it was just insane. I think the guys made a fortune on gas fees, even if the gas fees were pennies. It was just really so inefficient. So it's really cool that you guys have managed to do that. I think it's standard now anyway. So in terms of your recent kind of back tested results, what have you guys seen around that data? Pretty good. Okay, so what is pretty good?
Yeah. So we actually took like several alternative investment, assets into consideration. So the first one we analyzed was like option selling based vault, something that Ribbon does. And so based on the backtest, we realized that it's taking losses on a historical basis. So because of the downside volatility, the put vault is taking an even bigger loss. And so that was basically to the option vaults like the DOVs, and we also compared with the like lending strategy, which is like a more conservative yield strategy that investors use. And so there it was like you have full capital protection, no issues there, but you are like so conservative that the rates are very very measly. So the rates in fact in DeFi lending are actually worse than even the treasuries that you get in the
Less
US
than
market.
1%. Yeah.
Less than 1% historically. And so the reason for that is basically like these pools have been underutilized historically. So there's a lot more supply than demand, especially on the bigger protocols like Avi and Compound. And so and this is true especially for like the blues like ETH, BTC, and USDC. And so like that was like the comparative analysis that we got in terms of our own backtests, and the actual numbers that we got for our vault in terms of the backtest was in 2021 it was around 7% APY. This is taking into consideration all the like major events that happened in that year, and it was around the same number in 2022, which was when all the major shit show happened with FT and 3AC. And so like these are if you compare with DeFi native DeFi native yield generating strategies like like leverage farms, for example, there's the risk of liquidation. When you have liquidity provision, you do have high API, but even there's a risk of impermanent loss. And so based on like achieving a balance between capital safety and we do find that we fare pretty well, especially in terms of the historical backtests. And so like we just like recently launched in the market, so like we are also collecting a lot of data in terms of implementing the vault as well, and gas costs and all that taking that into consideration is pretty much of a challenge when you're trying to do backtests. But now that we have real-time data, it's a lot more better to feed our data analysis engine.
Our backtesting results are live, by the way. So to all those viewers, obviously, you can check it out. It's in our documents.
Yeah, and also to people who are listening on podcasts, just from a reference perspective, yeah, you can go and check it out on the website on Cruize.finance. Really, really important aspect to any protocol, and especially with protocols who are running vaults, obviously audits. Tell us a bit about who you guys have used, and that I'm sure very painful process of obviously doing things correctly. Yeah,
Painful and expensive. I mean, audits
yes.
are. We couldn't believe how expensive audits were when we realized the numbers that some of these biggest audit firms give up. I mean, it's just crazy. So yeah, I mean, we the initial audit we did was with a startup company called Armor AI. They're pretty good. They got into Techstars recently, starting their journey, initial funded. So they helped us out with the initial audits. That's one place done. And we have a current version 2 audit that will currently go out, I think by Certic. That's whom we'll go with, because they've been pretty good. Certic and or Quill audits. So these two will be our next auditors for the vault contracts.
So I think the big challenge is always going to be like, how much money do you spend versus the kind of audit that you get done? It's because you can go and get a 30 grand audit done, but then all you're doing is that you're just exposing yourself to a whole lot of risk. So what was the rationale for you guys in terms of like, do we spend $500,000 on an audit, or I mean, how did you guys?
We don't even have a $500,000. So yeah, I mean, the crazy part was I don't believe in audits. Like, honestly, I'm a tech guy, but I have almost less than acceptable faith in audits, just because of so many hacks that have happened recently in my space. And if you look at those, I think Euler Finance was the latest one that happened that shocked everybody in the DeFi space, and they were audited probably by 6 different audit firms. I mean, I don't know how much is that, $500,000, $1 million did they spend on audits? So I don't know. I feel like
but hold on a second. They landed up changing code that hadn't been audited.
That's exactly
and it was the code that it was the code that they changed that was what was hacked. So
that's the problem.
So
I mean, they're expensive, so you can't sort of like re-audit them constantly because they're just so expensive.
Yes.
You know, you can't expect somebody to pay $30,000 just because you changed 2 functions or you added 3 functions in the contract. Like, how much am I going to pay? So,
but I think Euler did prove that is really at the end of the day, that's the crux of this whole thing, is that you have to do it. You really don't. So
you do.
Are your contracts immutable, or are you guys able to change?
No, we're able to change proxy contracts. Yes.
Okay, so you guys are proxy contracted.
Yes, we went with proxy contracts because at the moment, I mean, if coming from a tech background over the last 10 years, one thing is code is never bug free. I mean, no matter how awesome you can write it, code is never bug free. Contracts, they are not bug free. So, and we're too early right now. So if we make them immutable at stage 1, we come across bugs too soon. It's just a rewiring of the entire protocol that happens if you want to have contracts. So it's too soon for us to make them immutable. And audits are definitely something we have in line. Like very soon we're gonna go with version 2 audits and spend a ton of money. So hence we're trying to build the best version of the contracts before we send them out. Samarth, sorry.
So what is okay? So sorry, just go ahead, Samarth. Go ahead.
We like
getting ahead of myself.
No, that's okay. Just wanted to add, like, we are also some, innovative auditing models that some of our partners have created. For example, there's like one of our partners, it's a protocol called Cruize FInance, and they actually created a new auditing model where the auditor themselves invests some money, and it's basically, they literally call it skin in the game audit. And so the auditor is basically betting their own money into their own, auditing process. So if things go south, they are also taking a hit. And so that does instill a little more confidence, if not all of it. And obviously, that there's even more models, we have some new implementations of bug bounties, which also, include a lot more upfront commitment from the auditors. And so, these are, I guess they haven't taken off as much as the conventional audits, as much. And so, that's also something that we're exploring in terms of consolidating our security.
That sounds like a really good idea. I think, like, from a bug bounty perspective, that's
community audits. Community audits are. I always like them.
Yeah. I mean, absolutely. I mean, it's definitely the way to go. And if you if you've got a bit of money to put in that direction, then you've got to do it, and then you've got to continuously motivate. It's not something that's over. I mean, I found a lot of protocols they're constantly chasing that whole aspect of things down. In terms of your relationship now with Ramses, obviously that's a DEX that you guys are working with. What is the relationship? Are you guys kind of like connected? Are you guys part owners in that, or is it a separate project?
It's a separate project.
It's a separate project, but we they are also early stage, just like us, and we found a lot of common ground. So essentially, we are working on like a long-term partnership. So we have a liquidity generation event coming on Ramses but beyond that, we are also, the vaults that we're working on, that is also something that we are working to. These are co-branded vaults, and over the long term, we also envision creating like a research collective to basically hedge against impermanent loss. And so we have even more interested partners. There's a protocol called Smiley Finance, which is also some
we know Smiley,
team that we are. It's also a team that we're in touch with. And so their main offering is hedging against impermanent loss, basically turning it into the other side, which is the gain for the holders. And so, like we are working on creating like a, research directive where we can create these vaults which bring together the best of all our protocols offer. Like one is good trading fees, the other is impermanent loss protection, and third is, like a generous boost without any additional capital. So that will be like an interesting collective to work on.
Cool.
Yeah. Ramses people have been around for a while. Yeah, they've been good.
Okay.
Yeah, that's how we got connected with the liquidity event, generation event, the public sale. We have it next week, so that's what ignited our conversation. Yeah.
So I was going to ask the question in terms of where you guys were at. You obviously mentioned your raise. So you've done an initial seed round. Is that you've just done one round? Is that correct?
Yeah, half a million. Yeah, that was a year.
So $500,000. So that was a year ago.
Yeah.
Okay.
May of 22. Yeah.
Okay, so that was May 22. You did your initial raise, seed event. Now you're doing a public raise. Where are you guys doing the public raise?
On Ramses Exchange. It's on 24th of April this month.
Okay, so what we'll do is we'll definitely put that in the link in this video and in the podcast itself. So I think in terms of the public sale itself, are you guys going to have a hard cap, soft cap? How are you guys structuring it?
We have a hard cap, yeah. $5 million cap.
At 5 million, okay.
With a $25 million fully diluted valuation.
Okay, great. And then in terms of your short to medium term plans for Cruize.
Yeah.
Give me the lowdown. What do you guys what do you want to do? What do you guys, besides the raise, what's on your radar? What do you guys want to achieve?
Yeah, so obviously the first line of business is, investing a lot more in security. And fortunately, like we don't have a very complex kind of implementation. It's fairly straightforward. So that does the work outside. And after that, we are also going to double down on, our research, especially for expanding the vault capabilities, and also going to invest a little more in business development. So, we are already in talks with some major protocols on Arbitrum, but we also have several other ideas for co-branded vaults with other major partners. And so one other thing that we also intend to do is also expand our team, because we're running a little tight on our the kind of tasks that we handle at the moment. So for example, completely stretched thin in terms of running the protocol, working on the vaults and also handling the sale at the same time, the liquidity generation event. So if it enables us, we also be able to expand our team. And I guess that covers it. Prithvi, you want to add anything?
I guess right after the sales, we'll have the staking modules enabled. We are trying to make the Cruize token be as useful as possible, expand its utility across the protocol itself. So that's the first thing, to build the staking platform, then build a few co-branded vaults, start security. Yeah, that's something. Yeah.
Okay. It looks like there's a lot. It looks like there's a lot that needs to be done, but at the same time, it seems like you guys have put that $500,000 to very good use. I mean, it's very obvious that
our team is awesome. Our team is amazing. Yeah.
Are you guys all India based, or do you have other team members around the world?
Around the world, yeah. Our lead community manager, Mike, he's from Finland. Our quantitative researcher, he's from Argentina. We had a content writer for a brief period. He was from Poland.
He was an intern from Poland. And fortunately, we had the chance to meet the whole team in the recent ETH India hackathon.
Yes.
Okay. Any conferences coming up that you guys are going to be at? Are there any plans to get out there once you've done your raise and you've got a bit of a marketing budget, etc.? I mean, what is the plan for conferences? Anything on
that? We're planning to be at ETH Barcelona, and we already have started talking with a couple of projects on hosting and most likely. But ETH Barcelona is mostly in the plans.
When is ETH Barcelona?
It's in, I think, early July. I'm not sure about the exact date, but
Okay. I think that's
I think
that's a
it's
conference we need to get to as well. I think that will be really nice. Middle of summer in Spain sounds terrible.
yeah.
We definitely have to get there.
Yeah, and also
And
the
where do
fact
you?
that it's like
So
a conference, unlike other ETH events, which are hackers. So there's a lot more alpha in these conferences.
Yeah.
So that's another reason to attend it.
yeah, I mean,
Yeah,
we
sorry.
found that the best places to be at these conferences is not actually at the conference itself, but to all the side events and the hackathons
Yeah.
and kind of like all the dinners and stuff that you get invited to. So that's where the real value in those conferences lie.
Yeah.
I think I've made the best connections at like a house party, and like I've seen you on Twitter. I should post it under one of your posts. Okay, good to meet you, kind of thing. So I think that's definitely the way to do it. I think the last thing for me is to just wish you guys all the best. I think you guys have got a really cool product. I see a lot of scope in terms of what it is that you are planning. It's almost like it's a little bit of something that a lot of the guys that are creating vaults at the moment are putting together, but you've almost like contained it in a way that allows for like the scalability and allows for the yield within that. And I think that's obviously really important. It's going to be interesting to see how when you guys launch, we're going to be keeping a close eye. And yeah, wish you guys all the best, man.
Thank
Yeah,
you.
thanks a lot. Really
Thank you so much.
great being here. Thanks for having us.
Yeah, it'll be good to see the result of your raise, and definitely going to keep an eye on that. So thanks for joining us. Yeah, all the best.
Awesome.
Awesome.
Thanks.
Thank you, Jedi. Thank you so much.
Pleasure,
Goodbye.
man. Pleasure.
All right.
Pleasure.